Hi guys, welcome to today's live. I'm talking about how Airbnb lost $4.4 billion during its initial public offering. All right, welcome. So my name is May Doldalau and my blog is yesfinanciallyfree.com. I live here in Hawaii. We own this 2-bedroom condo in Waikiki. We own another 1-bedroom condo down the street, also in Waikiki, which is an Airbnb Business. But back in 2011, I owned no property. I was over $40,000 in debts, mostly credit cards, lines of credit, things like that. And by 2016, I paid it all off. I improved our family's with about $500,000. I was making almost $500 a month, every month in passive income. And I quit my job. My last day was December 23rd, 2016, and I became a full-time mother. Part-time, I started coaching clients to do what I did. Now, if you're not on my email list already, go to yesfinanciallyfree.com, put in your first name, email address on the right side, and click the big red Yes button, and you'll get my free ebook, Working Parents Guide to Financial Freedom, sent directly to your email list, okay? So I just wanted to tell you all that and let you know who I am. I'm really about helping you become financially free as quickly as possible. I do everything I talk about. I do things that working parents can do, okay? Mothers, if you want to be able to create financial freedom in your life, make a real change, then I highly recommend you check out yesfinanciallyfree.com and learn how everyday people, don't have to take huge, giant risks, but you can slowly make your life so that you have freedom enough to quit a job, work part-time, or what you want to do, okay? So let me just figure this out. I'm on live on various different channels. I was trying to figure out certain things on So Twitter is a fascinating beast, and I will just let it be itself. Okay, here we go. So topic at hand, how Airbnb lost $4.4 billion during its initial public offering. Now, to me, this was big news because I thought Airbnb made tons of money. They're insiders, it's the everyday people who just buy the stock on the stock market that lose money. Warren Buffett, so many people have told me, I've read about it, I've studied it. If you invest in an IPO and you're not an insider, you're going to lose money pretty much all the time. Okay. I learned about it in, I think it was Random Walk Through Wall Street, that book. So it's really not a good idea to invest in IPOs, but I didn't know that Airbnb lost money in its own IPO. So I found that out last night. So I wanted to explain that to you so you can understand how could Airbnb lose money during its own IPO. The company, Airbnb, the founders, the people who created it, they lost $4.4 billion. When I learned this, something really hit inside me and I was like, if you are someone who creates a business like Airbnb, all right, any kind of business idea that's worth selling, you really need to understand this. But not only that, a retail investor, the ones like you and me who just buy stocks on the stock exchange, and when Airbnb comes up, we buy Airbnb, although I didn't do that because that's not my style. But because you lose money when you invest that way, you're actually giving the money to the rich people and the insiders and all that. But let's talk about this very logically so you understand exactly what happened. Just like me. It took me a while to figure it out. I explained it to my husband last night. He listened and he finally understood what I was saying, although it took him a while. Okay. Let's start with the basics, okay? Airbnb, these guys created a business, right? They wanted to have people host people from their homes, make money themselves, not a big hotel, but you want to make some extra cash. Airbnb was born, all right? That's fantastic. They did great service to the world. I know because my husband and I own an Airbnb business right now, all right? We bought it when it was already an Airbnb business, and then we continue doing Airbnb business. So we understand Airbnb business. We run one. All right. So in 2020, Airbnb is still privately owned. The owners created it. They're making their own money with Airbnb. Everything's fine. Airbnb almost goes out of business in 2020. So do we, right? Why? Because of COVID, right? Everyone stops their travel. No one's flying. No one's booking. They're canceling vacations. Airbnb refunds everyone all their money, everything, right? That means they refund back all their fees. And we don't make any of the money we're supposed to get, right? So we almost went out of business, okay? I'm not going to lie, 2020 was not the easiest year for Airbnb businesses, okay? So we almost went out of business. But that's not the only thing, okay? Airbnb almost went out of business too. They needed outside investors to come in. Now, if they had really gone out of business, we would have gone out of business, okay? So as a small business owner who is a part of the Airbnb network, we would have shut down, okay? Now, we would have sold the property and just shut down. That's what we would have done because there's no business, right? Now, Airbnb did not shut down, all right? Now, I didn't know this whole story till later. They almost did go bankrupt. They almost went out of business. They almost had to shut down. They had to find outside investors, all right? And they did. They found outside investors. Now, they had a bunch of offers. One of the offers they turned down was worth $4.4 billion. Now, what is going on there and why? And it took me a while to understand it, but I learned it from a newsletter. This Ian King Automatic Fortunes newsletter my mom gets. I read it last night and it explained the whole thing. And I was like, huh. And it's not about Airbnb, it's about IPOs. Buy this low risk, high reward alternative to IPOs. And he's talking about SPACs. Okay. So let's start from the beginning. Okay. When a business wants to go public, all right, what they do is they talk to a bank, maybe Morgan Stanley, or in his case, he's talking about, he worked at Citigroup at the time when he was doing this kind of stuff. He worked at Citigroup and Worldcom, which is now a dead business. Worldcom was offering a bond or an equity, a bond issuing. They were going to do a bond issuing. So, sorry, I'm trying to adjust so you can actually see me better. There we go. So Worldcom was offering a bond, and he talked about what happens when a company like Worldcom, Airbnb, whatever, some company wants to issue stock or a bond to the public through a bank. See, what the bank does is they make a deal with the company. All right. They say, okay, we will pay you this much for the bond or the shares. Okay. So per share, we'll pay you this much. You make a deal, you haggle, you make a deal on what you think it's worth. Okay. They do an evaluation. You decide if that's good. You might go to another bank if you don't like the price, but that's basically what happens. Okay. Now, from the day you make that deal to the day it actually goes public, the bank can change the price. Okay. So maybe they get shares, and this is what happened with Airbnb. Okay. So Airbnb, they got it. The bank that was working with the Airbnb business, they got the shares for like, what was it? $65 or something? Something like that. Let's see where they say that. I'm looking for the exact spot in the newsletter, but basically they got it for a certain amount, maybe $65 a share. Let me see if they say it. I forgot exactly what it was. Basically, they got it for a certain amount, yeah? And that share price was less than what they put it out to the public at. They put it out to the public at 100 something. The exact price. I'll put the exact pricing in my blog. I'll go through this and write it in. But the main point is there is time between when the bank gets it and they put it out. And during that time in the middle, they say, hey, I've got this offering of Airbnb or DoorDash or Worldcom or whatever company is issuing equity or a bond. And they say, who wants it, basically? And they go market it to their high-end clients, like trust funds, like big mutual funds, right? Not you and me, okay? Not everyday people. You have to be an accredited investor too, I think, to do that kind of thing. But they go around, they talk to these huge investors. Now, the huge investors start bidding on what they want to pay for it, and that's what drives the price up. So if they have more people wanting it, than they actually have available, then they start picking, who do I like? Who do I not like? You can get it. You don't. So this is a bank. He calls it the bank's dirty secret. The guy who wrote this article. He used to work at Citibank. So what happens is all the people who are friends of the bank, who give the bank big commissions for giving them this deal, right? So they make money. giving them the opportunity to invest in it. Okay, so they make the commissions. They get the initial pricing. Now, when the bank puts it on the market, because the demand is so high, and which they know because the institutions, they don't have enough to give out, they mark the price up. Yeah. So when they offer it to the public, they have this markup there. And that markup for Airbnb, the extra money, was $4.4 billion markup. Now, Airbnb didn't get that money. Who got it? All those banks and mutual funds and everybody who put the money in to invest in the IPO. Now, before it went public, okay? So they didn't get the money. Airbnb, the company, didn't get the money, which is sad because they created it, all right? Now, they had the opportunity to claim that money, more or less, because a SPAC led by William Ackman, called PSTH, Pershing Square Tontine Holdings Limited. He approached them, Airbnb, and he offered them to do a deal with a SPAC. Now, SPAC is different. It's not exactly the same. With an IPO offering, they went the traditional route. They had a bank handle it, and then they lost out on this $4.4 billion, right? And the bank made all this money in commissions. And okay, if they had gone the SPAC route, and I don't know if you've heard of SPAC, S-P-A-C, I've heard of it and didn't really know what it was. Basically, people put money in a company, and all the company is money. It's just a bunch of money. And the whole purpose of the company is to go find another company, merge with them, basically use their money to invest in that other company, and then take the company public, all right, without the bank in the middle, right? And then basically the company, the SPAC, and the company you're merging with become one, and you make the whole profit within that one place. And he's just making the calculation, and he says here, Bloomberg reported that Airbnb rebuffed Ackman's offer and decided to go the traditional route after Airbnb's IPO left $4.4 billion on the table, the difference between the IPO pricing and the first trade. It may have regretted passing on Ackman's offer. Now, we don't know. I'm not Airbnb. I don't know if they regretted it. Okay. But that is what happened. And I just wanted to share that with you guys to understand what's going on here. And if you want to know about SPACs, more about that, and this PERPSTH, that's what this whole article is about. I can do a blog on it if you guys like to learn more about SPACs, because I didn't know what they were until I read that article. I was like, oh. Okay, I hope you enjoyed today's blog. I'm going to put the exact numbers that I have in here in the blog so you kind of get an idea. And wishing you a great Wednesday. I will see you again. If you are not on my email list, subscribe, put in your first name, email address on the right side, click the big red yes button, okay? And then you will get emails when I'm live, exactly what I'll be talking about, any special deals that I have, and you will know, okay? So you get the end. And you also get a free ebook, Working Parents Guide to Financial Freedom, sent directly to your inbox. If you want my services, just go to yesfinanciallyfree.com, go to the products tab, and you can see all the services and products that I offer. Remember, everything I do is tailored for working parents. Working parents have no free time. Now, you still have to spend some time, but everything I do is 40 minutes to a couple hours a week, and that's it. That's the whole time commitment, okay? I believe in a long-term financial freedom habits where your life actually really changes for the better, and you have more time with your family. That's what I believe in, okay? So if you're interested in that, and you're interested in working with someone like me, who actually does what she's talking about, then go ahead and learn more at yesfinanciallyfree.com. There's a link underneath this video, okay? And you can also subscribe to my YouTube channel if you're on YouTube. And if you're on Facebook, thanks for being a fan. Hit the like button on the fan page. All right, see you guys tomorrow. Aloha. Take care. Bye-bye. And thank you so much